Marvin from StockMarketPlan.com with your stock market watch for June 19th, 2012. Looking at the spiders again, that's what we use here to gauge market breadth, the overall health of the market. Market is really showing some resiliency off of this 200-day moving average here, this purple line, and it looks like it wants to trek higher. I mean, yesterday I mentioned about the 50-day average, this red line here, that we were looking for a close above that 50-day average to add further confirmation that the market wants to go higher, and we got that today. We closed well above that level. Right in here is where we closed, so 135.70 on the spiders. So right now the only thing that is in the way of the market, it's really this high up here from back in May 1st. Maybe we actually take that back. Probably in here we're going to see some resistance. So but again, trading above the average is a good thing. Now the market has some legs. We can also draw a line right here. So we can also draw this line right here. Okay, so that's what we're looking at right now. The market's trekking higher, and it looks all good for now. There's nothing really wrong. Definitely pick on some stocks that with strong values, fundamental values, and technical values, and and piece in. I think the important thing is that the market is still very news driven. A lot of news coming out of Europe now. Today the Fed is meeting next couple of days, I believe, in regards to our situation here in the States as far as inflicting more cash onto the market and pumping more liquidity. In other words, trying to prop this market up as much as they can. The only problem is that they don't have much room left in interest rates. I mean, you go to a bank today and you get what? I mean, 0.10, 0.20 for $100,000 in your savings. I mean, it's gotten so low now, the interest rates, that there's really not much room. I mean, typically the Fed, that's what they use. I mean, monetary policy. They'll mess around with the Fed funds rate, which basically dictates every other rate you have out there, your savings, your loans. But they basically have run out of room there as far as how much further down they can go. So the next best thing to do is to print money. So they're looking at another what they call quantitative easing, and we've had one of those, and we had a second one, and now they're looking to do a third one. So it's definitely in the talks, and I think I think it's probably going to happen again. We'll print more money as long as a dollar doesn't go crazy and debunk. They're going to keep printing money and try to prop this market up. Doesn't matter what I feel. I think they should leave the market alone, let the market operate. However, I mean, there's powers out there that are trying to get this market up, and there's really nothing you can do to stop it. So just join it. It doesn't matter why the market is going up or why the market is going down. It just is what it is. In this juncture right now, the market is acting better than earlier in May and late April, back here. So we get a new leg, and it's going to come up. It's fully extended off of this trend line, so we can see this now. Okay, and even if it came down here, you still have support here from the 20. Might do this and might start bouncing up the 20. The 200 should follow suit, should do something like this. Okay, so a new trend has started. So an upward trend has started. Again, I would piece in, stress piecing in, in a positions. If you're going to buy a 400 share lot of a stock, maybe start with 150, maybe 200, because it is still yet a very, very volatile market as far as the news that is driving it. Every other day we've got news coming out of Europe. First is Spain, then it's Greece, then Italy, and not exactly in that order, but anything can move the markets at this juncture. And just hate to go out there and buy a full position and get whiplashed and come straight back down. So as the market proves itself, you can add on. So if we start going up higher, maybe we come back in here, pick up 150 shares, and as you start trekking higher and higher, you add on to your position. The popular belief is to go ahead and roll the dice and load up right down here right now, and watch it go higher, and somewhere up here pick a place to get out. What we like to do here is let the market prove itself, and as it's proven itself, you add on more risk. And that's how you manage risk. And in a market that is very volatile market, you piece into positions, and you come out of them as well the same way, instead of going all or none. Well, I want to thank you guys for watching the Stock Market Watch for June 19th. Again, this is Marvin from StockMarketPlan.com. You can also check us out on Twitter, Stock Market Plan, and on Facebook, Stock Market Plan. Have a good one, guys. Bye-bye.